Welcome back. With the rapid rise in home prices and mortgage rates over the past several years, more and more people are looking for assumable mortgages. In other words, houses for sale in which the home buyer can assume a much lower rate because they can take on the current homeowner's rate. That is an assumable mortgage. In today's video, I'll talk about the pros and cons of assuming a mortgage, how to find them, and also I'll share some examples with you guys as well. So of course, if you guys get any value of today's video, please hit the like button. Also consider subscribing as well. I post frequent housing market updates and also housing market related videos on the channel. So of course, I invite you to subscribe to this channel right now. I actually put it together this right here. So first, let's talk about what is an assumable mortgage, what types of loans are assumable, and I'll talk about some pros and cons. And also, more importantly, you do not need to be a real estate agent to find these loans that can be assumable by a home buyer. I actually found, based on my own research, how to find these on Zillow, Realtor.com, and Redfin as well. So first, what is an assumable mortgage? This is a mortgage in which the home buyer can assume or take over the current homeowner's loan. The new home buyer assumes the interest rate, which of course will potentially be much lower than current rates today. They will also assume the loan balance and also the P&I payment, or the principal and interest payment of the current homeowner, and all their terms of the current loan. So what type of loans applied? In general, VA and FHA and USDA loans, which are government backed, are assumable by a home buyer. In contrast, conventional loans are generally not assumable by a new buyer. So now that we know what is an assumable mortgage, and on top of that, what type of loans are actually able to be assumed potentially, let's talk about how it works. So a home buyer who finds a house for sale, actually it doesn't even have to be a house for sale. If you find a house in which a homeowner wants to sell their house or it's listed for sale, the buyer has to work with the current lender. So the homeowner's lender, the buyer has to work directly with that lender. You cannot use your own lender. So let me give you an example, because here's a major con regarding this theory regarding taking on the homeowner's rate. So for example, let's assume a house is listed for sale for $500,000. It has an FHA assumable loan. The seller's current loan balance is $430,000. Their interest rate for a 30-year fix is at 3.4%, which is much lower compared to today's rates, of course. So here's the catch. And this is why, for most reasons, this does not work out. Because for people using a FHA loan, purchasing a $500,000 home, your minimum down payment is only 3.5%. And for a $500,000 purchase, that'd be $17,500. However, if you want to assume a loan, you have to pay the difference in the sale price. I was going to say asking price, but basically is a sale price compared to the current loan balance that the homeowner owns on their house. So let's just assume you're buying a $500,000 home. The current loan balance is $430,000. This means if you want to buy that house, you have to pay $70,000 in cash out of pocket in order to assume this loan. But again, if you're not looking to assume a loan, the minimum down payment is 3.5%. So $17,500 for a $500,000 purchase. In this scenario, just an example, you have to put down $70,000 in cash. In contrast, let's look at a house in which, let's just assume the homeowner has owned it for quite some time, and therefore their loan balance is much less. So assuming a $500,000 purchase, their loan balance at $300,000, you have to come out of pocket of $200,000 in order to buy that house and take on the current homeowner's 3.4% rate. So my question for you guys, how many people do you know have $200,000 in cash who are using an FHA loan? I'm guessing it's probably unlikely, right? So ideally, you need to find a house that has a loan balance that is not too much less than the seller's asking price. So in other words, you probably have to find a house in which the homeowner just purchased it within the last 2 years, because if a homeowner purchased the house 10 years ago using an FHA loan or a VA loan, chances are they either have refinanced out of that FHA or VA loan into a conventional loan, but they could also be in a scenario in which their loan balance is much less than the current asking price. And therefore, a new home buyer, if they want to assume that lower rate, would have to come out of pocket by a significant amount of money. I'll talk a little bit more regarding pros and cons regarding this, but I want to also mention this as well, because a home buyer may have to pay a lender assumption fee. According to Quicken, it may be flat or maybe a flat amount or a percentage of the unpaid principal balance. The fee that can be charged may be limited by state laws and regulations, so check your rules in your area. And of course, you can always reach out to the lender as well. Just to give you guys one example, for a $500,000 house that's listed for sale in my neck of the woods, which again is in Sacramento, the lender assumption fee was $900. Again, it varies by the lender and the area probably as well. In contrast, the lender may not require an appraisal, so you could save in the range of $500 to about $700 for that. And also you could avoid an origination fee as well, which will also be savings for you as a home buyer as well. So before I share some pros and cons about how to find these assumable mortgages, because there's a lot of pros, of course, you could save a lot of money on interest payments, of course. I'll share an example with you guys here in a little bit. But let's actually go to Zillow, and then we'll have a look at Realtor.com and Redfin, and I'll share exactly how you can find these. And I just did this on my own. So just looking at, just type in your area. I'm just going to type in Sacramento County. This is on Zillow, of course. Make sure you're looking for houses for sale and not sold or houses for rent. Look for your price range. My opinion for you guys, or my advice for you guys, just keep it very, very broad so you can see how many assumable mortgages out there for houses for sale. So I'm looking for all price segments, all bedrooms and bathrooms, home types. I'm looking at houses, townhomes, and condos. And also click on this right here, more. And I'm just looking at all the houses for sale by agents. So there's 1,247 houses for sale by agents in Sacramento County, which is approximately 1 million people. Only 13 for sale by owner. In any case, go down here. You want to keep this very, very broad, but go all the way to the bottom here and just type in Assumable. You also can type in Assume as well, but I am typing in Assumable, and then you hit Apply. So when you do that, it's going to search for the MLS or the for sale listing in the description. If the term Assumable is in that description, you'll see the house for sale. So there is, how many houses for sale? There's 6 houses that have this potential for an assumable mortgage. And that's these 6 houses right here. So only 6 houses out of 1 million people that live in Sacramento County. Pretty wild to see that. So also go to Realtor.com as well. So just go to their homepage and click on Buy. Again, search for your area. I'm just looking at Sacramento County. Again, I'm looking at all price segments, property types. Let's look at houses, condos, townhomes again. Click on Done. Number of rooms, just keeping it open, all houses for sale. Then click on More, and then type in right here, right at the top, Assumable. Hit Enter, click out. You can see that there is 12 houses for sale that have this assumable term in their MLS description, which is all these houses right here. Some of them actually are not for sale. There's actually quite a few that are actually pending. This one at the bottom's pending, this one's pending, and then also this one as well. So let's just say around 9 houses for sale, 8 houses for sale, 7 actually, around 7 houses for sale on Realtor.com. Let's have a look at Redfin. Again, Sacramento County. And this one's a little bit different. Click on houses for sale. You can look at coming soon as well. Let's actually just look at active listings. Done. All price segments, all bedrooms and bathrooms, home types, again, houses, townhomes, condos. Done. Filters. This one is kind of in the middle. which is right here. Keyword search, Assumable, 7 houses. So kind of the same houses we're seeing on these other websites as well. So that's how you find these houses that have this potential for an assumable mortgage. You do not need to have a real estate agent find these for you. Also, something I found to be interesting is that when I go onto my local MLS, which is the greater Sacramento area, I look for houses for sale that have this assumable keyword. So I'm looking at single family houses, condos, and townhouses, all houses for sale, and also looking at Sacramento County only. Then at the bottom, and this is something that agents can search for. So if you have an agent in Sacramento or the greater Sacramento area, this is how they can find these properties. So public remarks, again, I'm searching for the keyword assumable, just like these other websites that I share with you guys. So just search, filter this by houses actually for sale. And some of these are including areas that are not in Sacramento County. So West Sacramento is in Yolo County. So there's actually 5 houses for sale in Sac County that are technically for sale right now that have an assumable mortgage, at least in their description from the local MLS. Also, if I filter this by houses in contract with a home buyer, there's approximately 10 houses under contract in the greater Sacramento area, including areas in Placer County, Yolo County, etc. I also can search this by the number of offers received. So one would assume, this is one of the cons I'm going to talk about in today's video, is that if there is let's just say a small difference between the asking price and the current loan balance, one would assume they would have a lot of offers. The houses sell for well over the asking price, unless they're just asking for high prices to start with. What I found to be interesting is that for much of these pending home sales, a lot of them only had 1 offer received. Some had 4 offers. One had 5 offers received. So overall, we're not seeing a giant increase of activity. We're not seeing like 20 plus offers. I'm guessing the reason for that is due to the fact that, maybe this house for $950,000, maybe their loan balance is only $600,000. So therefore, maybe these 2 home buyers who place offers, maybe they weren't even planning on to assume the current loan or an interest rate from the homeowner. And therefore, because of that, they didn't get 20 offers compared to 2 offers, for example. Going back to my notes here, let's talk about the cons of assuming a loan. Number 1, you have to work with the seller's lender, and it's up to the lender whether or not to approve you. And on top of that, it could take months as well. I actually reached out to a listing agent who has a house for sale with an FHA assumable loan. He told me it's going to take approximately 90 days to sell a house compared to only 30 days in the resale market for a non-assumable mortgage. And that's why I said right here, longer time to purchase the home, potentially several months, and it varies by the lender. Number 3, they can be hard to find, but I gave the tools to actually find these on other public websites. There's also a limited number of houses for sale with this assumable clause as well. Number 5, because you could secure a mortgage interest rate far below a 7% rate, the home could sell at a premium. In other words, if the homeowner thinks they can sell their house for far more than current market value because they can offer a 3%, 4% rate, whatever it is, which is much lower than the current rate, one could assume that they could get a premium for their house. Number 6, you need to pay cash for the difference between the sale price and the current outstanding loan balance from the current homeowner. This could be a significant amount of money, as I mentioned in my examples. Number 7, a homeowner with a VA loan could lose their VA entitlement if you let a buyer assume your VA loan. So here's an article I found on veteransunited.com. It says for VA homeowners, the big consideration with allowing an assumption is their VA loan entitlement. If the person assuming your loan is a veteran with sufficient, keyword sufficient, VA loan entitlement, then you can ask them to formally substitute their entitlement for yours on that mortgage. Otherwise, the entitlement you utilize to purchase your house will remain tied up until their loan is fully repaid. On top of that, failing to get a substitution of this entitlement can limit your 0% down payment purchasing power when it comes to reusing your VA loan benefit. It's also possible you wouldn't have enough entitlement remaining to reuse the benefit at all. VA homeowners also lose that portion of their entitlement entirely if the assumer or the home buyer later experiences a foreclosure or a short sale. So if you let a home buyer assume your VA loan and later that home buyer gets foreclosed on, you could lose your entitlement altogether. In other words, allowing a civilian to assume your VA loan can affect your future use of the VA loan benefit. For some homeowners, that's a risk worth taking. Others may decide to allow for assumptions only to veterans substituting their entitlement or selling their house through a traditional home sale. And going back to my cons, number 8, the lender may charge you an assumption fee. That fee varies by the area. So let's talk about some pros. And my cons list, of course, is much lengthier compared to my pros list. Number 1, you could get a much lower rate compared to current market rates today. So here's an example for you guys. So let's assume a $500,000 purchase and the homeowner has the FHA assumable loan. Let's assume the current loan balance is at $430,000 at 3.4%. Let's assume that today's rates for an average 30-year fix is at 7%. So your P&I payment, which is principal and interest payment, would be $2,861 per month. At the 3.4% rate, your payment would only be $1,907 per month. This means you would save $954 per month due to the rate going from 7 to 3.4%. Additionally, not only are you saving this nearly $1,000 per month, but on top of that, you're going to pay far less in interest paid over the life of the loan as well. So for example, over the life of a 30-year fixed rate loan, you're going to pay $600,000 at a 7% interest rate, assuming you have a $430,000 loan balance. Compare that to only $257,000 in interest paid at the 3.4% rate. Here's that calculation. So at 7%, a $430,000 loan, again, your payment around $2,900 per month, but your interest paid, because that interest is so high at 7%, $600,000 in interest paid. Therefore, over the life of the 30-year fixed rate loan, you're going to pay over $1 million. In contrast, again, loan balance, $430,000. I can't highlight that. Your payment would be just over $1,900 per month, and your interest paid only $256,000. So therefore, that, including your loan balance originally at $430,000, your total costs would be $686,000 over the life of a 30-year fixed rate loan, compared to over $1 million at the 7% rate. So big picture, not only are you saving this monthly payment, but also you're going to pay far less in interest paid over the life of the loan as well. All right, that's number 1. Let's take a look at pro number 2. So for VA loans, you do not have to be a veteran in order to assume a VA loan. This is much different compared to buying a regular house. You have to be a veteran or a active member of our military in order to purchase a house using a VA loan. In contrast, if you want to assume a VA loan, you do not have to be a veteran. Number 3, you could avoid paying an appraisal fee and potentially an origination fee as well. That could save you over $1,000 as well. And with that said, please leave me a comment below. If you guys search on Zillow, Redfin, Realtor.com in your neck of the woods, please leave us a comment below. How many houses do you find that are for sale in your neck of the woods that have this assumable keyword in your search? Please leave me a comment below regarding that. If you guys got any value in today's video, please hit the like button. I greatly appreciate that. Of course, I appreciate you. Like and subscribe, and we'll see you on the next video.